Welcome back. You're tuned in Chartbusters here on CNBC TV18. Let's get chatting with our first management. Uflex posted a steady quarter of earnings. There's a good top-line growth. Though, in fact, we did see top-line growth. Margins came in a tad bit lower, more or less flattish on a year-on-year basis. That's primarily because increase in raw material costs. Mr. Rajesh Bhatia, the global CFO of the company, joins in. Hi, Mr. Bhatia. Thanks so much, sir, for joining in. Morning. Your margins came in at sub 12%, or if I'm looking at it for 9 months, it's at around 12.5%. Every time we talk to you, Mr. Bhatia, you tell us that we are moving towards that 15% odd. Give us that time frame. When will the margins move to 15%? Is Q4 the quarter that we see it in, or are you postponing it to FY20?
So, I've always said that, the margin of 15% is a kind of a misnomer because, we talk more of a margin per ton, and the increased raw material prices with the top line going up by 18%, but, the production volume or the sales volume going up by 3% only during the quarter, that clearly reflects that, the cost increase is definitely there, but, the industry more or less works more on a fixed margin per ton basis. So I think, the margins have to be seen in that context. And I would say despite the fact that, in this quarter, we saw a 40% fall in the crude oil prices starting from about $85 on 1st of October to about $50 on 31st of December. So this is the quarter where we've seen that, the prices of the crude have been constantly falling. And what happens is, as the customers see them, so they stop buying because every successive purchase, they find that, it is going to only get the things cheaper if they postpone by a few days. So there is a destocking, the inventory losses customers want to avoid. Yeah. But still, against the backdrop of that, we still achieved the 3% increase in the sales volume, 4.5% production volumes, 18% top line growth. And I think this is what sets the leaders,
So Mr. Bhatia, taking all these points into consideration, the volatility that we are seeing in crude oil prices, as you're telling us as well, that, customers, they want to sit on the sidelines, they say maybe we'll get our product cheaper. So taking all this, all these factors into consideration, what should the margins we be working with going ahead?
I think if we are looking at about $62 crude oil price, I think we happy at about 13 to 13.5% margin for the time being.
All right.
As we dip more into the aseptic packaging business and more into the holographic business, that's where we will aim at a mix of about a 15% margin range. Yeah.
Go ahead, Mr. Bhatia.
Yeah, on the aseptic packaging, I think this being the best quarter, and Q4 still looks to be the better in terms of the order book we have. So I think we got now about more than 40 customers which we are currently servicing, and the season that begins now from Q4 and going right into the Q2 of next year, I think we're seeing a very good growth in the aseptic packaging business. This quarter on that business we still EBITDA minus, but Q4 we for sure, given the orders in hand and given the performance in January, we feel that we quite confident that we'll be able to be an EBITDA break even in that business.
Mr. Bhatia, if you could throw some more color on what Q4 is shaping up. Are you likely to see this low single-digit kind of volume continue even in the March quarter with a lot of your dealers destocking the inventory? Can you walk us through what the current situation is right now?
So I think current situation is far better than what we had in November and December. October was a robust month. November and December were a bit subdued in terms of the sales volume given that the crude falling prices. But now that the crude has settled between 60 and 63 kind of a level, I think that concern for our customers.
So volume growth has picked up?
Volume growth has picked up in this
quarter. To what?
I think we'll be able to give you about 7%, 7 to 8% increase in the current quarter in the film.
Okay, and on the realization front, considering that, now crude prices have stabilized, what kind of a price increase can you eke out in the current quarter?
I think we can, as I've been guiding that, in the BOPET films, we've been seeing a gross margin of about 50 rupees, which was there in Q2. Q3 was a bit less. But Q4, we will see anywhere between the Q2 and Q3. So say about 47 to 48 rupees of a gross margin we currently see.
Currently it's 47 to 48, and quarter 3 it was how much?
Quarter 3 was about 46.
46. Quarter 3 was 46. You're talking about gross margin spread on BOPET, right?
BOPET, yeah.
Okay, and also what is the current pricing of BOPET? It had hit a high, I think, of around 140, right?
Let me just give you the
very roughly, sir. You could also help us out in terms of value added out of this total BOPET sales that you're doing, right? Because that gives you a better gross margin.
Yeah, so when I say our margin of about 48 rupees, we that includes the
value add,
the value add as well as the everything else.
All right.
Current prices on the BOPET, the 12 micron is about 125 rupees.
125 rupees. Okay.
Yeah.
One final word: the debt on your books
is round about the same. I think we looking at about a gross debt including working capital of about 2,100 crores. So while we paid some of the debt in this year, there's been some more debt added as we getting reimbursements for the capex, which we planned. I think we have, as I said, that we are through our capex cycle in India at least for now, and we're looking to sort of consolidate from here on.
Okay, and so but debt reduction plan, will it happen in FY20 at least?
I think definitely, because there are no further capex. So we're looking at about Q3 FY20 repayments of about 270 crores coming up in India, and about $20 million in overseas. Overseas, in any case, sits on a very low debt. The term loan in the overseas business is hardly about $40 million.
So half of that you'll repay. Half of that you'll repay.
Half of that we will repay.
Okay, and your aseptic business, I remember you were talking about 350 crores, then it came down to around 260, 270 crores. What is the number we should work with for FY20?
FY20 we will look at about 350 crores.
Okay. Thank you, Mr. Bhatia, for joining in. So that's Uflex saying that volumes have picked up in the current quarter. The debt should come down next year, and aseptic business is doing quite well, targeting a revenue of 350 crore in the coming year. The stock is inched up a tad bit. We'll slip into a very short break. On the other side, Jindal Stainless is on our radar. It's posted a weak Q3, a detailed discussion with Anurag Mantri, the CFO, on the other side. Stay tuned.